am. Me. 20 dwarves. In sooth, I know not why I am so sad. Good morning. All right, welcome to Forex.Today, the YouTube community of almost 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of putting together a trade plan during this New York trading session. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Hey, my name is Wayne. I'm a currency trader. I have about 20 years of experience, so I'm here to share. Let me know how I can help. Technical analysis, fundamental analysis, it's all good. Macroeconomics is something that I love. Global money flow, something that I love. Trading, something I love. I like to scalp, spot, swing, carry, and position trade. So please ask questions, and I will do my best to help. In fact, not only am I here every single day on YouTube, but in the description below the video, there are links to my book. Okay, costs money? Sure, it costs money. It's a book. Dude, it's on Amazon. But there's a link to free trading courses that are about an hour and a half, I think, about how I use moving averages and pivot points and all this kind of stuff. Very nice, all free. It's been up there for YouTube for, 13, 14 years. That resource has been available to you. If you want premium content, 65 hours of training videos are available at fxbootcamp.com for a whopping $88 a year. And then, of course, hey, you need a broker that's trustworthy. You need one that has competitive fees. Do you want a broker that has fast execution speed? Do you want a broker that actually pays you your swaps? Because your old broker probably doesn't even pay you swaps. If you want a broker like that, like I did, I joined with Traders Way 8 or 9, 10 years ago. It's been a long time now. But if you go back to that Swiss National Bank depegging when big brokers went out of business, Traders Way was just absolutely tickety-boo fine. And I asked them, like, well, why are other big brokers going out of business? And you're fine. What's going on? Like, well, we executed the trades. How would that adversely affect us? We don't hold the trades. We actually execute them. And I'm like, yeah, makes sense. Boom. Okay. All good in the hood. So tradersway.com, that link is in the description below, but you can just go directly. Don't worry about it. You don't have to click the link. Don't worry about it. You don't have to click the link. You can just go. Open up a demo account, test them out, see if they can earn your loyalty and respect like they're in mine. So good morning, everybody. Okay. Good to see you. Comment allez-vous? Let's see what's on your mind. What are you trading right now? AJ say, hey, what's up with the yen pairs? Yeah, well, maybe the central bank is still intervening. You're right. Technically, they look like they were set to fall. Okay. Too bad, huh? All right. What are you trading today? Looks like it's 50-50 USD and Japanese yen. So let's start with the Swiss franc. We'll get to those others. I just want to give you a fresh perspective before we start. Actually, you know what? Before we start, let's go even fresher perspective. Sorry about that. Let's do this. Let's pull up a calendar. Let's go through the calendar. It's Monday. It's early in the, right? It's early in the week. You got to pull that together. Let's do something different today. We'll use the calendar here. Am I zoomed in too much? No? Okay. La 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 la. Okay. Wow, this is too detailed for me. How do you change it? You know what? Let's just use the one on Forex.Today. Too detailed. Yeah, burned. Yeah, it does. You're right. We'll get to that. All right, so what I do with this calendar is I only have medium and high. I don't have the low impact stuff. And in fact, you could even narrow this down. But sometimes I disagree with what they say is medium. And but anyways, so we can just really very, very quickly drop to the most important thing. Okay, that's one trick. Okay, one little trick. So anyways, today a lot of Great British Pound news, right? You can see month over month, GDP up. There's a lot of Fed speeches today. There's more than two. Williams, Bowman, but I think there's 3 or 4 speeches today. Maybe they have that under low. No, but there's a lot of Fed stuff going on today. They're not official speeches per se. They're all speaking at different conferences like the Economic Club of New York and stuff like that. But nonetheless, yeah, we can learn. Are we going to do 50 basis points or not? Okay. You know what? Let's just start with high only because I want to do the most important ones right off the bat. Okay, so for example, okay, we got RBNZ probably raising interest rates. They were one of the first to start. Okay, they're already at 1%. They're going to go above that. Very, very high chance that they're going to go above that. Okay. Kuroda is speaking, which could be interesting. Okay. Bank of Canada. Interest rate decision. See? A lot going on tomorrow, huh? Okay. And then to finish out tomorrow, Aussie jobs report. Okay. Now you're like, well, what about, UK CPI and stuff? Yeah, just overshadowed by all this other stuff. Okay. But, okay, just like, look at this day, man. USD CPI. Okay. I mean, just amazing amount of wonderful stuff here. Johnny's like 2.75 on the 10-year. Yeah, that's good. That would point to stock market up. Also, remember that whole inversion? Taken care of. Okay. Right. There's a positive spread. I think we're at 0.2% on the 210. Okay. So anyways, so all is right as rain. Everything's right as rain. All right. But anyways, you see like just tomorrow and Wednesday, right? Tomorrow and Wednesday are huge. And then what? Then you go on to Thursday. Hello. Is there no Friday on this? I guess there isn't. I thought there was bigger news on Friday. So let me throw the medium on now. Okay, yeah, there we go. Okay, Wednesday. So Tuesday's huge. Wednesday's huge. And then you're like, well, then Thursday, Friday is going to be quiet, right? Chinese FDI. I kind of like that. ECB interest rate decision. Now, they're not going to raise interest rates yet, but they're going to announce the end of, of purchases and the beginning of interest rates going up. Probably like the June meeting. I think there's one in early June for 0.1 and then another one in July. So that'll be very interesting to see how Lagarde announces all of that. And in particular, the response to it. Okay. U.S. retail sales, huge. And then finally, you can take the day off on Friday. Why? It's Great Friday. Some people only have Good Friday, but in my household, we have a Great Friday. So anyway, so there's nothing going on Friday because it's a holiday. Milo says, where is all that money in the treasuries going? Well, very often it goes into the stock market. That's why they have an inverse relationship. When things are good, you buy the stock market. When things are bad, you buy the bond market. So that's part of me buying up the stock market in the last 2 or 3 months. I've been buying up all kinds of stock in all different industries. And that's just my tax strategy account, not my personal retirement account, but my corporate retirement account. So I look at that more like a venture capital investor, where I like to pick very long-term home run type things. Like I either lose a little bit of money or I make a lot of money, right? It's sort of like I'm looking for hundreds of % return on investment by the time I'm a silver fox. A mighty silverback. Okay. Now, these glasses. Okay. So anyways, look at this week, huh? And then Chinese GDP. And obviously we want to know how much they've slowed down. How much they slowed down. So anyways, huge week. I don't think you're going to get a reprieve at all this week. It's just you're going to have a busy week. And I recommend every time you sit at the charts, okay, you pull up this calendar on Forex.Today and you pay attention to everything. So you sit down and you're like, oh, wait, is there any news coming out in the next 4 hours? Okay. Do I look at low cap stocks for that? I look at industry sectors first. So like, for example, last year I bought XPeng, which is a Chinese electric car manufacturer. My other choices were Li. My other choice was NIO. And I looked at all three and I said, you know what? I want to go with XPeng because 40 or 50 or 60% of their employees are software developers, not car people. And I thought, well, if Volkswagen ever wants to get, catch up, let's say, in developing EV software, in particular autonomous driving software, they could just buy XPeng and plus also get instant access to the Chinese market. Well, I got out of that because I realized I made a big mistake. I'm betting on a car manufacturer. And I realized I was kind of like, let's say it was 1849 during the gold rush in California. And I was placing bets on the miners. Which one miner is going to strike it rich and which other ones are just going to die broke in the Sierra Nevadas. And I realized I'm playing this all wrong. You want to bet on Sutter. Sutter owned a sawmill, and and it required a lot of milling because you needed a lot of, infrastructure to build the bigger and bigger processes that they were using to try to get gold. And timber in particular cut into 6x6s and stuff was important. And then he got into other things like general stores and selling you the pick and the axe and mules. And I realized I want to bet on the companies that are serving the miners, but not picking which miner is going to strike gold. And so anyways, I dumped the Xpeng because I realized, I like Volkswagen and Porsche. Like Porsche is developing awesome software that VW is just going to take and pop in their Passats, right? So your Passat's going to have Porsche software. But then I'm like, yeah, but I like the guy that's in charge of electric vehicles for Ford. That guy is really smart. I listened to an interview with him. He's really, really smart and doing an amazing job. And I think Ford is going to roll out great products and they're going to do it right, not do it wrong. Where I look at like Mercedes, they roll out that new EVQ or whatever they call it. And I'm like, those guys don't get it. It looks like a giant Prius. I'm like, dude, that's not what people want. So anyways, so I think a lot of companies are going to do it right. And even the ones that don't do it right, everyone is going to be making electric vehicles. So why would you bet on a startup? Okay. So anyway, so instead I've been buying the electric vehicle charging stations and stuff. And so that's right. So that's, so the question is, what kind of investments am I making in that way when I say I'm investing more like a venture capitalist? Well, I bought like ChargePoint and EVgo, which are the big ones in the United States. And I'm betting not on individual car makers, but I'm betting on every car maker is going to move toward electric, and we're going to have a shortage of charging stations. Now, the downside to that is, well, you only need a charging station when you're driving long distances. You don't need to charge going to work because you charge your car at home. And the second thing is the batteries just might get so good that you won't need to stop. Where if you can go, I think right now you can go about 400 miles. I think if you can go like 750 miles on it, you'd never need to charge. Okay. But so I'm making, let's say 10-year bets, maybe 20-year bets. We'll see. But I have a feeling that batteries will get so good, you'll just never need to charge them. Okay. So that kind of thing is my thought process. And I just recently bought the cheapest sector of the S&P 500. I just bought an ETF actually two ETFs that basically represent the cheapest stocks. Remember, I don't want cheap, really. Low value. I got the highest value. I'll say it that way. I got the highest value stocks in the S&P 500, and I just bought them just recently. Of course, they're already down, so they got even cheaper. But it doesn't matter because I'm thinking 15 years ahead minimum. And one day, right, in my view, one day the least interesting stocks become the most interesting stocks, and then everybody piles onto them. So I'm kind of waiting for the bottom for everyone to get out of this market, but I believe in the market. Yeah, Burns says, hey, the grid can't handle all these electric cars. Yeah, not my problem. I don't care. I wake up in the morning and I want to trade Forex. There you go. All right, so I went through the calendar. Super ripper, amazingly important week. Almost every couple of hours, there's a big piece of news. So I want you to hear me. When you trade this week, open up the calendar at Forex.Today and double check what is about to happen in the next few hours. Don't just log in, okay? Just don't log in. You're like, oh, what am I going to do? No, come on, man. Now be careful this week. Okay. I asked you, what are you most interested in? dollar, yen, or Swissy. You said either dollar or yen, and then I said, let's do Swissy. And again, I want to start with something you haven't been watching for the last 8 hours, okay? So let me set this up a little bit differently, and let's change the template here. Does commitment of traders help? Absolutely. Yeah, I noticed the chat doesn't come up anymore. What's happening with the chat box? Let's see if I can figure this out. I've forgotten how to use custom frame rate. No. Refresh maybe. Maybe you just have to move it forward. No. It's too bad. I have to figure it out. On the stream, it's not putting up the chat. Background color. Always show me. Too bad. I'll have to fiddle with it. Okay, so let's go through this. Euro Swissy. Okay, we know as we approach the number of 1. Okay, so we got as low as basically 101, not quite, 101 and 50-ish. And we know that this gap here is supremely important. Okay, the closer we get to this line, and we're only 150 pips, okay, the more likely this is going to happen again. Okay, but less likely is some sort of non-action that nobody plans on. In the Swiss National Bank, I don't know. You know, the problem is, I guess is what I'm saying is, if everyone is betting on this and something else happens, everybody loses. And but nonetheless, this is what everyone is watching. Now, one of the reasons I like pivot points is they visualize what we're mentally concerned about. And so we look at the high, the low, and the close, and it does calculations. And then, based on that, it says, look, this is S1. Isn't that interesting? This is support. It's calling out already double bottom. Isn't that interesting? Now, if you're a bull on this, and maybe Euro becomes bullish in regards to changes at the ECB. I know you're thinking French election. I know. Okay. But it'd be interesting if you do get a change in direction. Because if you remember when this happened, I said what you want to do is base things on you helping the Swiss National Bank do what it wants to do. Swiss National Bank wants this to go up. So if you look at this, this would be your general plan of action. Okay, Richard says the Swiss franc's been stalling and gaining strength and all that kind of stuff. Yeah, but we might be looking at it on a much too small of a time frame, where as a position trader sees this and then they say, yeah, we want to buy somewhere in this price range, and they're going to take it up here. And you might be sweating bullets in this little move here. And you're sweating bullets in this move here. And you're sweating bullets like, look, for 2 days, it was slightly down and slightly up, and you're getting all frustrated and you lost 15 trades in there. Meanwhile, someone else is just like, yeah, somewhere around there, buy it. Okay. And that's that. And that's their Swiss National Bank play. They're like, yeah, we'll buy it. Put your stop below parity and you're good. Right? Are those fib-based pivots? No. No. But, okay. But what are pivots and Fibonacci both trying to do? Fibonacci. Okay. What are they, and what is price action? And what is Elliott wave? Okay, that's enough. Okay. What are these four things trying to help you do? Yeah, but it's not just support and resistance areas. No, that's not partially. I mean, it's true, but who cares? You always have to answer the why. Like, that's what. Okay, Bernd? And look, again, I went through university for 5 years in my mid-40s. So I was reminded of a lot of things. Number one, most students don't answer the damn question. Okay. And then two, the students that answer the questions in their paper, in their exams, or in class discussions, the ones that don't do well, they always just regurgitate what was in the reading. And they say what it is. So like, and I'm not picking on you, I'm just sort of making a clarification of the next level of thought. You are completely right. Yes, support and resistance, but who cares? Remember, you always have to answer, who cares? Like, what's the importance? Yes, support and resistance, but who cares? Why? Why do you need that? And that's the next level, right? Why do you care about support and resistance? And that's why what all of these things are doing. Yes, they all identify support and resistance, but for what point? Okay? And like Libor says, measure pullbacks. Yes. Okay? Because if I'm a bull, I want to buy at support. I don't care about resistance because by definition, if I'm a bull, I believe the resistance is weak and it's going higher. That's why I'm a bull. So I don't really care about resistance. I care about support. And a bear doesn't believe we're going higher, we're going lower, so they only care about resistance. Why? That's where you sell. And why does a bull care about support? Well, that's where you buy. So we're using different, right? These are all different. This is different math, right? This is like high plus low plus close over 3, okay, which is a weighted average. And then from that, based on range, give you levels of support and resistance. Great. Fibonacci is, right, more like high plus low divided by 2. That'll give you the 50%. And then you want to look at basically 1/3 above and 1/3 below, right? Now, I know it's 3A2 and 618. That's BS too. Who cares? So we really want to know 1/3, 1/2, 2/3 on Fibonacci. Okay. Price action, again, is just doing basically what Fibonacci is doing, or pivots, but it pays much less attention to, let's say, the percentage or the price, but more of the action. So you're looking for higher high, higher low, higher high, higher low, higher high, higher low. And very often what you're doing in price action is you're looking at the old resistance becoming support. So it's like roll reversal, roll reversal, roll reversal, roll reversal. And then Elliott Wave is looking at patterns in the price action. So you might have, 5 waves up and then a little correction and 5 waves up. Well, why do you get the 3-wave correction and then 5-wave move up? Well, you're doing multi-time frame. And that's why I use daily, weekly, and monthly, and even annual pivots to capture the multi-time frame price action, which is also developing multi-time Fibonacci, because the 3-wave correction on a smaller time frame is a Fibonacci pullback on a higher time frame. Okay? What happens to a lot of traders is they think about all of this independently. And what they don't think of is, let's say, 5 different techniques of doing the same thing. And instead of, an amateur looking at it like you're trying to do all of these things and you're trying to line them all up perfectly and you never get it right, where you just really just pick one, man. Just pick one and then add a second one. So what I ask you to do is, the first thing you learn is price action. Because you don't really care, is it a 3A2? Is it a 50%? Is it a 618? Is it, a high low plus close divided by 2 plus the range divided by half, and then you're doing all these math. You don't really care. What you're looking at is higher high, higher low, buy it. Higher high, higher low, buy it. Higher high, higher low, buy it. Okay? That's the first thing. But the thing is, with price action, it's always looking backwards. Okay? Now, it can be leading as an indicator when you say things like, you don't believe we're going to make a higher high. And so as you approach this, you say, oh, that's going to create a double top. And you can think about that ahead of time. And the cool thing about price action is if you're wrong and it hits higher, you buy the dip and you're gone, long and gone again. Okay? But at least you can predict and you're like, well, this is probably going to be important. Okay? Great. And then you look at this, now it's made a lower low. So again, we're down here and you're thinking, yeah, you want to sell it, right? So it can be a leading indicator, but it's also lagging because you need this to predict that. Okay. Then the second thing is you should probably learn pivot points. Pivot points, because it's also a helpful tool, but very often not for an entry, but even the exit. Richard says all tools and technical analysis is lagging price. Not necessarily, no. Okay? So let me tell you, Richard. Okay? And by the way, I hear this stuff. So because you heard it on a different live stream, don't repeat it here, please. Right? It's just baggage. If I didn't say it, it doesn't exist. Okay? So I don't believe that to be true at all. Otherwise, why would you use any of it? Do you understand? Oh, if it's all lagging, then don't use any of it. Like, it just doesn't make sense. It's like, and I'm not going to go on a tangent here, I hope. But it's like some people come in and they heard some other guru say fundamental analysis is nonsense. News is stupid. Everything is priced in. So all you do is no, dude, just check that crap at the door. It's right. So anyways, So here's what now I'm going to be positive, Richard, because I'm not picking on you, but I gotta shut those types of comments down because I'm trying to train. I'm trying to teach you, right? So, right, if you were a bull, let's say you're a bull. In this zone here, you should be prepared to buy if you're a bull. You don't buy it just because you're there, but now you use price action, you do all these other things that might lead you to buy this. Now, we're not quite there yet. It's a little early. But at least you're in a zone where you're ready, willing, and able. We always talk about being ready, willing, and able, RWA. So if you were a bull, remember now, that's not a technical decision. That's based on macroeconomics. For example, you are saying the Swiss National Bank will either push this up now or they'll push it up later. Okay, look, not technical at all. Okay, that's a strategic play. Cool. So, Richard, RWA. Okay, now you're like, you might argue, you're like, Wayne, but these are pivot points based on the last measure of market, high, low, and close. Yes, that is lagging, but that's not how you use them. Okay, they don't necessarily give you a direction. That's not what they're used for. So if you are RWA as a bull here, and let's say you get an opportunity like this to buy it, Richard, check this out. This is your target. That's a leading indicator. Okay? You're going for 105, maybe 106, depending on your level of aggression. This is mid-range. I'd say I'd be conservative, so I'd go for the 105. It's telling you this, like maybe 106, okay? And so now, Richard, that would be a leading indicator. It helps me immensely to say, if I hold this, I know to what price I can hold. I have a sense of the future. And yes, I'm using a measure of the past, but to predict the future. Okay? Pivots do not tell you to buy down there where it says RWA. That's not how you use pivots. But let's say this first area is wrong. Okay, Richard, let's clear this out again. Let's say this first area doesn't develop and this just drops like this. And then, okay, you get price action up and you buy this off of parity. Do you know what this tells you? It predicts the future. This is now your target. Okay? Right? Oh, I know you are, but remember, I'm coaching not just to us, but there's lots of people that watch these videos after the live event, and a lot of people are brand new to Forex, and I just got to be careful. Like I've heard all kinds of things, right? Like fundamentals don't matter; it's all in the price. All indicators are lagging, so you might as well not use any indicators at all. Well, I don't think that's helpful advice to new traders that are just starting out in trading, right? To say you should not use any technical indicators because they're all lagging. And I know you didn't say that, but many do. And if they're all lagging, what's the point? So very often I hear you should have no indicators at all. I don't think I even have a naked one anymore. I don't. Okay. So I don't recommend that. Okay. Right? And this idea that everything is based on the price. So you don't need to understand macroeconomics. You don't need to understand central banking. And I just totally disagree with that. And I always have. So I got to be careful. I want to make sure everybody, not just you, right? Everybody needs to hear this, in particular the newest traders that are coming from gurus that have been trading for 5 years, right? And they're making big bets on small trades. And they're like, you don't need to understand how technical indicators work. You don't need to understand how global macroeconomics work and monetary policy. I'm like, whoa, that is bad advice in my humble opinion. Right? So thank you for giving me a soapbox to stand on. But again, I'm not picking on you, Richard. You just gave me a great opportunity for a speech. Okay. Cool. So anyways, going back to the price action part, this is clearly what's in play. Is that right? I mean, I don't think of anyone in particular when I say that. I just know if I type in Forex 15 years ago, no, wait, YouTube's not even that old. 12 years ago when YouTube was brand new, if you typed in Forex, I was the first 12 pages of videos on YouTube. Of 50 videos each. So I was the first to have hundreds and hundreds of videos on YouTube. And now when you type in Forex, I don't come up at all. Okay? And I don't know how many other Forex gurus talk about how to invest their corporate Forex retirement accounts, right? So that when they retire, not only did they avoid paying hundreds of thousands of dollars in taxes over the years, but they've turned it into millions of dollars so that they have a base to live on when they're young. Or, in my case, 15 years ago, talking about how to save money to send your kids to college and all that kind of stuff. Like, I don't drive a yellow Lamborghini, right? I don't. Now, I do drive a fancy car, and it's actually kind of funny. But then I have a quick story for you on that, which just negates everything I'm talking about. But, I'm a real person, and I'm raising a real family, and I'm managing my money like a smart person would. And so, no, I don't have a yellow Lamborghini, but I put myself through 5 years of Harvard, which is the same as buying a yellow Lamborghini. And I did that to be a role model to my children, but also it would help me as, let's say, a professional fund manager have a higher level of credibility based on my education level, which is a much better return on investment than some stupid fancy car that I'm leasing to impress people on YouTube. Right? Oh, Richard's like, yeah, cool. So anyways, so now that I said all that, I got a funny story for you. So I went to the Masters last week, and I stayed at the Parent House, which is the original farmhouse Bobby Jones stayed at when he was visiting their land. And then he bought the land and built Augusta National Golf Club, where the Masters is held, right? So I stayed in the original farmhouse, and we had a Michelin star chef and everything, and it was really cool, an open bar. It was all fabulous. But instead of taking a shuttle to the golf course, we had Porsches. So we had a Porsche team show up with a tent and some sample cars and 10 drivers with 10 Cayennes, right? Beautiful. They had GTSs, they had turbos, and they had the regular ones. And they're all black or white, black and white, black and white, black and white. And I roll, right, and they're pimped out. Like, they had really nice ones, right? Very nice, brand new Porsche Cayenne GTSs and turbos. So I pull up in my black Porsche Cayenne GTS, and it's all murdered out. And I have a very rare one. There's only like 7 in the United States, right? So it's lower, it's wider. I got halo lights and the huge rims on it and stuff. And I roll up, and the Porsche boys went nuts. And the staff of the hotel came out, and it was really cool. And so the Porsche guys were impressed. And so we had these long conversations, and they loved it. They loved my Porsche. The Porsche guys loved my Porsche, which was really, really cool. And then on as they were driving us to the golf course the next morning, the Porsche guys like, "Hey man, we all love your Porsche." I'm like, "Cool, man, that's right on." They're like, "Yeah, we all love your Porsche." I'm like, "Dude, from a Porsche guy that works for Porsche." You're like, "Cool, man." I'm like, "Yeah, I love it." Yeah. So anyway. But the interesting thing, right? the value of my car is almost doubled. A friend of mine tried to buy one, not the Magnum. You just can't find Magnums, but he bought one. He was trying to buy one just this 1 year newer and stuff, but and not all the upgrades. And it was twice as much that I paid for mine. Yeah. Now, I don't want to show it on YouTube, but if you're in the day trading group or the swing trading group, I can show you a video. It's pretty amazing, actually. But for the Porsche guys, love it. So anyways, I smiled because my dad was with me. And he's like, my dad says, I have to take another look at your car. He's like, I just didn't understand. Now that the Porsche guys loved it. He's like, yeah, okay. All right. All right. So anyways, down to up. And my point was pivot points, if used properly, are a leading indicator. But where most people use them wrong is they look at them and they ask the pivots to tell them what to do. Okay? Now I have a solution for this. And this, right? We can do something like, let's add this. No, that's actually not what I want to do. Where do I have this? All right, I have it this way. We are going to do position trading bullish bias. Okay, so think about this. Here's all your technical analysis. This is still Euro Swiss franc. And you can do whatever technicals you want. Okay, so you might say this, or you might say this. Great. But let's say you have a fundamental bias, a strategy based on something like the Swiss National Bank will not let this drop below parity, so therefore I'm looking for buying. Great. Okay. Right? Cool. So that is not a technical strategy. So that is not whatever. You can call it fundamental or you can call it something else, but it's not technical. So you've made a decision up because you think you're going to support what the Swiss National Bank wants to do. So now you go to this other template that I have, position trading bullish bias. Okay. Now check this out. Okay. I took away everything that is not interesting to a bull. And it removes the necessity for a trader to say, oh, the pivots tell me up or the pivots tell me down. Pivots don't do that. So you actually, in the settings, okay, have to add bullish mode or bearish mode. Isn't that cool? So helpful because it takes away the psychology of you're doing what the technical indicator is doing. Well, the technical indicator is not some form of artificial intelligence that is reading the market and making decisions. It doesn't do that. None of your stuff does that. You need to stop using the tools that way. Okay? Instead, if you were a bull, because of the reasoning I outlined, this would be the area you should be ready, willing, and able. So now you're looking for additional lagging indicators, if you will, like a moving average crossover. What about a 2155 cross up? That tells you technically this market is now bullish based on moving average crossover theory, which means you have a higher high because you cannot get this cross up without a higher high. So now let's go to price action. You have a moving average crossover bullish confirmation from a price zone you would expect bullishness to occur based on what you believe the Swiss National Bank would want to buy at. Now you have a higher high. Now what do? Okay? You see the confluence of strategies, but the thing is that they're all trying to do the same thing. So you don't need to have this confluence of strategies. You just need to do one or two of them very, very well. So what do you do after the higher high that created the 2155 crossover up? This is where you answer, by the way. Thank you. Higher low. So, how do you do the higher low? And this is going back to our previous conversation. How do you do the higher low? Well, you can look at this and do a role reversal. You can measure from the high to the low and get a Fibonacci level. You can get a pullback to the moving average. Okay, and that's just three ways, right? So price action is buy the dip. Fibonacci is buy a 382. Okay. Moving average is buy the 55 up and then buy the 21 and then up. So on and so forth. And then Elliott Wave, again, is trying to predict the future. Okay. So again, going back to this idea that all indicators are lagging. Well, I guess, I don't know if, I'm sure there are Elliott Wave tools. I don't use any of them, but the idea that you're thinking of up, down, up, down, up, down, up, down, up, down, up, down, up. Well, like if you're thinking 1, 2, 3, 4, 5, A, B, C, whatever, and then up again, you're only in wave 2. And you're already thinking about wave 5, creating a 3-wave correction at the top there, well, then that can't be lagging at all because you're thinking so far ahead, right? So anyways, so not all things are lagging. Otherwise, there would be nothing that you could do. So now I'm making another point here where you can use moving average, you can use pivot points, you can use price action, you could use Fibonacci, you can use Elliott Wave. But the thing is, what the most important thing is that in here you were ready, willing, and able to buy, and you used a technique to confirm market conditions are favorable to your strategy. Thank you, Libor. Yeah, my Porsche is made by a company called Tech Art in Germany. And it's a Magnum, a Porsche Cayenne Magnum. Yeah. Which is funny. So you take a Porsche Cayenne GTS and you take my Porsche Cayenne GTS Magnum. My wheels and brakes are worth more than the Porsche Cayenne GTS. The wheels and the brakes. So they're rare. Yeah, they're rare, but they're cool. They're cool. All right. Cool. So yeah. So good. Great. Okay. So right now this is showing Swiss franc strength, which is an indicator of risk off for now. Okay, maybe we're waiting for earnings season to begin and all that kind of stuff. Yeah, maybe. Okay, doesn't really matter why. We're using analysis now to just say, if you are a bull, market conditions are not necessarily favorable for you to be buying right now. Okay, what you want to do is like buy stuff like this. This is what we call a role reversal. And then this is what we call an oopsie. Okay, don't be shocked if we double top. So now what's interesting is, will this remain above this zone? Okay? Because it's not a lower low yet. It's just a double top. So there's two likely scenarios with this. We hit this bottom and head up, and then we head down, and we're going to be in a range until it breaks. Where is it going to break? When is it going to break? Nobody knows, but we just move in a range. And usually, I would say, if we end up ranging here for a week, eventually it'll break to the upside. Now, technically speaking, if we get a lower low, that sets up the new lower high, which gets us here, and we will stop at 66.78. Now, why do I believe it's going to stop at 66.78? Because I'm using a leading indicator, not a lagging, that says because this is the top, this will be the bottom. Nice! Okay? And so now as a bull, I look at this and I'm like, as a bull, my next trade is probably like something that pops like this, and maybe it plays out like a bottom here. And that's not a great setup, so I probably won't take that one. But it'd be interesting if that did happen. So he did kind of bottom here, higher high, higher low. Then I could probably take that one. Okay. Okay. Omar says, hey, didn't the Swiss National Bank change its stance on lowering the franc due to the high demand of imported inflation? Maybe. Okay. All we know is what happened. Okay. But they did, in the recent Swiss National Bank report, they did mention that they intervened less this year than they did last year. Okay, cool. So that's that. Let's go over, do dollar pairs now. Okay. Euro went up, and you're going to hear stuff like, oh, that's the election in France. Okay, dude. Okay. Do what you want to do. Now, a swing trader is going to say they are interested, RWA, ready, willing, and able, to swing this down if they're still bearish. Okay? That's that. Easy. It's easy, but in the sense that you had a strategic plan. Yesterday, you would have thrown down a limit order here or maybe a little bit higher, and you're like, you're going to keep this below 110. Okay? Okay? And that's your plan. And your target is down there, 107. So you're selling at 109 or a little higher, somewhere between 109 and 110. You're taking this down to 107. You already know that. You're just executing your strategies. That's fine. Okay. A much more aggressive play here is you're treating that as a double bottom. Okay. Your S1 predicts a top of 112.5, let's say. We're a million miles away from that. But what you're setting up as a bull, remember, again, your pivots aren't telling you to do that. You're telling you to do that. And this is your RWA here. And you're probably going to look for a double bottom or a higher low, higher high idea. So you're going to switch your daily pivots to bullish. And you're going to try, but realize what you're doing. I want you to think about this. What you're actually doing here in the beginning of your trade is treating it like it's a range trade. Okay. And there's no way to really be able to predict that we will make a higher high, except the S1 predicts an R1, but there's a lot of work that needs to happen before you're able to do that. Okay. And so you're betting against this big drop. So the only way you can do that is say, well, you have an MS1, okay, you have a WM2, and now you're going to basically, and you can probably see this, we're near tomorrow's buy zone. So you're looking at this dip here, this little zone that we're in right now. In fact, you're thinking later today, sometime in this New York session, you are buying a dip and you're done for the rest of the week, maybe even the rest of the month. Is that what you're thinking? But that is a range trade. And if you're lower than this, you better back the F off. Sorry. Oh, I'm still sick. You can hear that. Okay. Because you're executing, a fairly difficult trade. Okay. And the easier trade is this one. And if you're doing something other than those two trades, I'm not sure what you're doing. Right on, Richard. That's good. If you have that personality, Richard, I think you're going to do fine. You're going to do fine. Because the market will beat you up a hell of a lot more than I will. Yeah, Lucas says, yeah, that's a great attitude. Yeah. Okay. So here's the big thing. Last week, I said, watch this level at 125. And holy crap. We blew the doors off that, huh? Gee whiz. Amazing. So there must be more intervention going on, but I'm not certain why. So I might want to spend some time on the BOJ website today and figure out why more intervention. Because if you look at things like, I don't know, I showed a bunch of currencies, but let's just pick on Bitcoin today. If you look at Bitcoin, it kind of looks like risk off. If you look at Swiss franc, it kind of looks like risk off. Now, maybe that changes in the near future, but whatever. Then when you look at yen, in a scenario where the various markets are showing risk off, one would suppose, based on normal price behavior amongst currencies, normal, okay? And remember, there's reasons for normality. In a normal market, in this type of situation, one would expect the Japanese yen to be strong. That's just based on market conditions, sentiment, if you will. Now, based on seasonality, also Japanese yen very often tends to get strong. Not always, but does tend to. And then when you look at some of the trade setups from last night, some of these, okay, maybe not that one. Let's pick on one of these. Pound I stayed away from. Okay. Okay. Well, let's do, what was another one? Kiwi, I think, was pretty good last night. Yeah. Anyways, you can see, okay, that a lot of these either had double tops, okay, and in other cases, they had lower highs and had done the move down. All of which is quite bearish. Okay? A lot of this is quite bearish. Okay? You would expect yen to be strong based on seasonality. Okay? You would expect yen to be strong based on sentiment. You'd expect Japanese yen to get strong based on technical resistance above us. And what happened last night was yen weakened. Odd. Well, what we also know is a big part of this move was Japanese yen intervention, or a Bank of Japan intervention. So, and that was supposed to have ended last week. So maybe I missed something. Again, I was away at the Masters last week. So, and the week before that, I was in New York. Okay. By the way, do you know how much New Yorkers hate Donald Trump? President Trump? One of the nights I stayed at the Penn Club, and they have pictures of Benjamin Franklin everywhere. Okay, and then alumni all over the place. And Trump was president of the United States just a couple of years ago. There's no pictures of him anywhere. And Trump went to Penn. He went to Wharton. And there's no pictures of the most recent president of the United States at the Penn Club, which is just funny because they're like, oh, yeah, he went to Penn. Oh, yeah, he was president of the United States. Yeah, we're not going to mention him at all, which I thought that was pretty funny. So I'm going to have to spend some time on the BOJ website and do some research. And see what's up. Did I miss something while I was traveling? So, and my internet must be a little slow. There's other things going on, like the dollar strength, I think, is interesting as well. And one of the things I've been kind of looking at and coming to terms with is the terms of trade. Made us as ridiculous, I would say. It's something, though, right? It's something. It is a statement. Okay. But, maybe he's not a member. Maybe he's like, I ain't joining that club. Okay. So there might be animosity there, and maybe even Trump started it, whatever. Maybe he doesn't like Wharton or something, but I think it's funny because Penn is University of Pennsylvania is basically how do you say it? Right wing school is a conservative school, and Harvard across the street is a liberal school. So you can say on the right side of the street is the Penn Club, and on the left side of the street is the Harvard Club, which I think is funny. But anyways, so I've been looking at and sort of analyzing different parts of terms of trade. Now, what does this mean? Well, the United States is a huge importer and it's a huge exporter. Okay, so what the United States imports a lot of things, but let's just say cars from Japan and stuff from China. And what does the United States export? Intellectual property, planes, commodities. Okay. Now, what I'm coming to terms with on my research in terms of trade, you love it? That's a lot of terms. Is that the stuff the United States imports is cheaper when hit with this inflation supply chain issue stuff. The stuff we're importing is cheaper than the stuff we're exporting. So even though if you measured the units that we're importing and the units that we're exporting, now some of it is cheaper, but some of it we can't get, so we're not getting it, so we're not actually importing. So basically, we're either importing less because of the supply chain shortage, or what we actually are importing, might be up in terms of price, but the stuff we're exporting is up more in terms of price. And that our terms of trade have actually flipped, which is dollar positive. So you, right? And by the way, if anybody here is new to FX Bootcamp, you need to join FX Bootcamp and learn like macroeconomics, for example, okay? So that you can have a conversation with us about stuff like this. But we know that nominal GDP is equal to C plus I plus G plus X minus M. Okay? And what, in terms of dollar, and that's what we mean by terms of trade, in terms of dollar, X is unusually high relative to M, which is not what happens. You can go back 50 years in the United States, and that probably has happened 5 out of 50 times. And it's a short-term supply chain issue. And this radical inflation and stuff. So let's say the United States is just better able to export wheat at double the price than China is able to, or Taiwan, let's say, is able to export semiconductors. Okay? What's up, B-Rad? Where you been, man? I haven't seen you in a while. So X, in terms of dollars, okay, is up relative to M, and that is unusual and will almost certainly reverse. And so things are good right now for the U.S. economy, and the dollar is unusually strong. But why? See, I only care about why. And the why is probably this. And not that why, but the why. The why. The question why. Why? Oh, so when the supply chain fixes, right, or normalizes, exports, okay, in terms of dollars and in units, we'll reverse this. And yes, we'll export a lot, but we'll import more. And then that'll be right as rain, and the dollar will weaken. So that's kind of what I'm kind of chipping away at. Does anybody have a comment on that thought process? Oh, yeah? You'll get it, man. You'll get it. Well, Stanislaus says, has a question about how weak does the Bank of Japan want the currency and stuff. Well, part of my thought process on yen, if you recall me talking, I guess it was two weeks ago when we were here, and then again when we were here, one of the things I discussed was Japanese yen pairs falling, just like I just drew. And I had to explain what occurred here. Well, Milos, they may be soon. So Milos, I'm answering Milos's question. Why isn't the U.S. posting record trade deficits then? Well, it would be the opposite of a trade deficit. That's what I'm trying to say, X minus M. And when that comes out, we'll already know because I see it in the dollar. And I understand seasonality and I understand some other things. And I'm like, so what I see now is unusual and that would explain it. And so when it comes out that we have less of a trade deficit instead of more of a trade deficit, I'll tell you, see, I told you so. It just hasn't been reported yet, but I can see it, okay, in the matrix. Okay, now going back to this, to explain the dramatic move in the yens here going back to a month ago, part of this is Japan, okay? So in terms of yen, okay? Let's do it this way. Okay, in terms of yen, Japan had to buy oil. Now, the problem is oil went up 100%. Let's say. Okay? From 75 to 150, whatever. Just go with me. Let's keep the, okay? So how much more yen is required to buy the same amount of oil? I guess we have a lag. Yeah, but yeah. Again, Charles, stick with the thought process. I mean, you're right, and we can talk about that. But yeah, we can talk about that too, Charlie. Chuck. Okay. Okay, 100% more. Okay. If oil went up 100%, you need 100% more yen to buy the same amount of oil. So what happened in this period when oil skyrocketed because of supply constraints or worries about the Ukraine? So double the amount of yen that normally goes into the interbanking system, right? You have twice as much. Okay? Now, the interesting thing is Japan imports an incredible amount of energy. An incredible amount of energy. Okay? 100% of GDP. Okay? So, twice as much than normal in a very, very, because oil went up really, really fast, right? So now every time a ship enters a port in Japan has to take its yen, okay, send it into the interbanking system, okay, and convert that into USD. And then the USD is given to the oil exporter. Okay? So Japan got oil, but sold yen. You understand? The Bank of Japan is the one selling the yen because they're converting yen into dollars. So dollar is strong. Oil is strong. So one of the things so we talked about this weeks ago. So one of the things that I was talking about 2 weeks ago now and last week was oil prices coming down could lead to less weakness, not necessarily strength, but less weakness in the Japanese yen. So you could set this up, for example, right here, right now, right here, right now, right here, right now. Charles is like, yes, Charles. And we talked about it weeks ago, not just 2 weeks ago, but before that. Now, the velocity of this is unbelievable. Okay? So, I don't mean to downplay that. That was redonkulous. But the understanding of why and then how things will change. Okay? Now, you might say, so is there a correlation between the yens and oil? Well, there is now, such that we see this type of price action. Normally, okay, you won't see that idea. Okay? But I want you to think about, in a normal world, oil is going up because demand is up. Demand for what? Everything. We call that aggregate demand, or AD. Aggregate demand. Demand for houses, for gold, for cars, for computers, for t-shirts, for beach lawn chairs, for travel, for dentistry, and fuel for your car. And then all the factories that make this crap that you're demanding, you want to buy a TV, it has to get made somewhere in some factory. And that factory requires people, and you have to pay those people wages. But it also requires rent. It also requires energy. And then once the crap is made, you got to put it on a boat, which uses energy. And then you got to put it on a truck, which uses energy. And then you put it on a train, which uses energy. Then they put it on another truck, which uses energy, which goes to a warehouse, which requires wages and rents and all that kind of stuff. Then it gets put on yet another truck. Finally, it gets to your door. So when there's aggregate demand, energy, 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 energy. And a lot of the stuff we buy is made out of plastic. The t-shirt, made out of plastic. The chair, made out of plastic. The t-shirt, plastic. TV has plastic. Okay? And even the wheat in the bread that you eat, you use nat gas to make the fertilizer to put in the ground. Okay? So all this requires energy. So you can say when aggregate demand, so let me redo this properly. Okay? Okay, when aggregate demand is up, oil is up. Okay? And when oil is up, think of this period here. Japanese yen is down. Okay? So now you should think about everything that we do. Okay, now this is definitely everything is in the price concept. But I do like technical analysis, but I want you to think about what we do. We analyze global macroeconomics to understand aggregate demand globally. But you can also break it down to every sub-economy that we do. What's aggregate demand in Australia like? What's aggregate demand in New Zealand? What's aggregate demand in Canada? Aggregate demand in Mexico? Aggregate demand, right? And so you could even look at that. It's not microeconomics, but let's say in terms of macro, it's micro because you're saying not global demand, or aggregate demand, but localized, right? And so we can break that into pieces and start saying, well, aggregate demand is higher in one country than others, but also Remember, this is the price taker, okay? And this is the order taker. Okay? So there's a relationship in supply and demand. Okay? So what we want to do is look at aggregate demand for individual economies or even the global economy and say, oh, aggregate demand is up. So one economy will benefit in one way, a different economy will benefit in a different way. Okay? And therefore, right, if you break it down to, let's say, oil, you can say, well, one country is importing oil and the other one is exporting oil. So they'll be impacted in much different ways. So you could do like more specifically, you'd look at this. Okay. Who benefited from higher oil prices? And right, or let's say when oil prices go up, how did that impact Canada and how did that impact Japan? And you can say, well, Japan has to export yen. Japan has to sell yen. See, Peter's like, I don't know why JP falls when oil goes up. Think about it. What I'm breaking it down right now, Peter. Japan sells yen in exchange for oil. So what happens when a country is selling its currency? The value of the currency falls. They're selling it. It's on sale. It's cheap. Another way of looking at it, if they're selling, okay, twice as much. Okay, let's do it in this way. Let's break this down. Okay. Price, quantity. Now, maybe I'll take away price. Sometimes people confuse that. So let's just say the value. The value of the Japanese yen. Okay? So you got 1, 2, 3, 4, 5, 6. So obviously the value goes higher. Now the quantity, 1, 2, 3, 4, 5, 6, 7, 8. So up means higher value. To the right means more quantity. And you have demand is downward. Okay? So when the quantity is 8, the value is low. When there's very little, it costs a lot. See, normal supply and demand. Okay? So think of that. Like you're like, I still don't get it, Wayne. Why is, if the quantity is 8, why would the value be low? Well, think about a store. And they have 10,000 t-shirts in the inventory. And they thought people were going to buy these t-shirts, but then people are not buying them. What does the store do? Okay? Okay? Let's say the store has 4. Or they're selling it at 4 and they have that much quantity. Think of it, guys. They have way too much inventory and prices are at 4. They drop the price. So the price value, they drop it from 4, put it on sale for 50% off. And demand quantity goes up. So demand went up because they lowered price. We know that instinctively, right? Instinctively, you lower the price and they sell more product. And so like getting that quantity is important. So we have supply and demand, which gives you an equilibrium. The supply of Japanese yen globally, this is what we call the interbanking system. Okay, so the supply, okay, of Japanese yen globally in the interbanking system at value 4 is, quantity 5 is worth value 4. We just call that equilibrium. So here's my point. Like, don't get hung up on equilibrium. That's just fair market value, let's say. Okay, and this is just yen in terms of yen. But what is important in this discussion is you're thinking about the global banking system, how much Japanese yen is available, floating around in the around the world. This is the supply of Japanese yen globally. Okay, and there's supply and demand. So Japan enters the market. They sell a whole bunch of Japanese yen relative to normal. Normal would always find equilibrium. But because oil doubled, and Japan must have this oil, they sold twice as much Japanese yen as normal to buy the same amount of oil, and you get this. Hang on, let me try to do that reasonably parallel. Okay, supply 2. Okay, which means we went from equilibrium 5. So let me do this in a slightly different color now. Okay, so what we're trying to get at here, now if I drew this properly, we would be at 10, but you get the idea. What happened was the supply of yen shifted to the right, which means we went from supply 5 to supply 7. The quantity, okay, the quantity shifted to the right, which means quantity went up. There's significantly more Japanese yen in the global market because Japan sold the yen to buy oil, and now that yen used to be in Japan, now it's in the global interbanking system. Okay, so the quantity of it globally went up because remember, if yen just exchanged hands domestically, nothing changed. There's still the same amount of yen in Japan, but now this yen doesn't exist in Japan. It exists everywhere else in the interbanking system. So because supply went up, quantity went up, the value went from 4 to 2.5. And now in economics, you can you start measuring the distance, for every quantity up, how much did the quantity come down and what's the sensitivity or elasticity to the change and the rate of change and all this. And you can get right into this as deep in the weeds as you want. But I'm just trying to say Japan sold Japanese yen much more than they normally would, and that lowered the value of the Japanese yen. And someone was asking, what was their strategy for that? Well, maybe it wasn't necessarily a strategy. Maybe there's some complexity here going on. But one part of the equation is definitely oil prices going up. And then the next question is they didn't understand, well, if oil's going up, why would yen fall? Well, I want you to think about, okay, in terms of trade, oil doubled. Japan has no oil, so they paid twice as much yen for the same amount of oil, twice as much yen in the market than normal. So quantity went up, therefore the price went down. And then 2 weeks ago, we were talking about oil having already peaked in price, and that oil was more likely to normalize. So it went from, it was at 30, then it came back to 100. Then it went up to 20, came back to 100. Okay, it's been more down than up. And since that peak, the yen pairs have not made a higher high. And I'm trying to explain why. Now, there's other things going on that add more levels of complexity, but you got to understand every layer of the onion. And this is just one layer of the onion that you should understand. So now you realize you're not just a pure technical trader looking for a 2155 crossover or MACD crossover or whatever you're looking for, but you can start to analyze situations and say, oh, that's interesting. Okay. Okay. So I want you to think of this. June 1st is peak oil as far as inventories. From there, very often you see, because we have such a high level of supply, that prices come down a bit. And in that same period, okay, the Japanese yen tends to get strong. Okay? And it's interesting. You're like, oh, well, maybe there's a relationship. And I say, oh, you stink? Okay. Cool, huh? Yeah, I got to go, man. Stock market's open. Sorry, Papa's got to go to work. Well, thank you for being here. Please like, please subscribe, please leave a comment. Please visit tradersway.com. There's links in the description below to my book, to free training, to paid trading, to my live trading groups, and all that kind of stuff. They're all there. Did you know my weekly swing trading group costs $99 a month? Did you know that? $99 a month. It's cool, man. We have a cool group. Peace on earth. May the pips be with you. May our profits be above average.